McDonald's. It's the McDonald's earnings. We've got a big one for you this morning. One of my favorite stocks, actually. So that's coming up very shortly. Right after this, McDonald's serves around 69 million customers every day. That's more than the population of many countries. Visiting McDonald's daily across over 100 nations. Think of that. McDonald's makes more from real estate, more than burgers. McDonald's owns some of the most valuable commercial property in the world and earns billions from franchise rent. Over 95% of McDonald's restaurants are franchised. This creates an incredible, powerful cash flow machine with lower operating risk than many restaurant competitors. We're going to talk about it. It's a big day. It's the McDonald's earnings. Get ready for it. Tap the like button. If you're watching this later, you can skip through the build-up, but we've got a few minutes to go before the call starts. We'll be right back with some analysis, looking at the company, and then right after this, we've got IonQ earnings, the big story of the day. Expect a huge audience for that one. That one is trending right now in the business world. So right now, we've got the McDonald's earnings. We've got some facts, information, deep dive, hearing directly from the company live. You get to hear the CEO, the CFO live from the company. That's all coming up with the McDonald's earnings. Don't go anywhere. If you're watching later, you can skip through this, get a cup of tea on, get ready for the McDonald's earnings. It's showtime. Time to make some money. Good morning. It's the McDonald's earnings. Very, very exciting stuff indeed. Just a few minutes to go before we start the McDonald's earnings. Are you ready? Are you excited? I'm excited. It should be a very, very interesting morning. The McDonald's earnings coming up in just a few minutes time. So McDonald's serves around 69 million and a day. Unbelievable. We've had a technical break this morning, but doesn't matter. I can carry on. You'll hardly know the difference. You watch this. I'll have a reset. You won't see it. Hopefully you won't see it. Bit of a flash, bit of a bang, bit of a wallop, but doesn't matter. We keep going. We reposition, and sometimes stuff happens in this life, and we just have to make a few adjustments, and I think we are there. Okay. All right. I think we're good. We're good to go. So, as I was saying, before we go into the call, McDonald's serves around 69 million customers every single day. Just think about that. That's more than the population of many countries, visiting McDonald's daily across over 100 nations. We've got the big story coming up. We've got IonQ right after this as well, but it's a big day for McDonald's. That comes up. We've got a good beat this morning. The market is up on it, and we'll come to the call in just a few minutes. Number two, McDonald's makes money from real estate. I've always spoke about this. It's a land business, not a burger business. More from real estate, more than they do from burgers. McDonald's owns some of the most valuable commercial property in the world and earns billions from franchise rent. Number three, over 95% of McDonald's restaurants are franchise. This creates an incredible, powerful cash flow machine with lower operating risk than many restaurant competitors. It does. Mainly though, like my Coca-Cola, it's about the branding. Number four, McDonald's has one of the most recognizable logos on earth. It certainly does. The golden arches are reportedly recognized by more people globally than the Christian cross. Think about that. You wouldn't think that, right? You're in America, you think everything's a certain way. Travel around the world, see things a little bit differently. Imagine that fact. Incredible, right? These are all fact-checked, by the way. This is my own deep dive research. McDonald's sells about 75 burgers every single second. That's roughly 6.5 million burgers sold every single day worldwide. Think about that. The Big Mac is used as an economic indicator. Economists created the Big Mac Index to compare purchasing power and currency strength across countries. Was you aware of that one? Important that, because you can see and judge where the economy is going by the burger sales at McDonald's. It's important. It's why we cover the earnings. It's why these things are so important. Number seven, McDonald's generates tens of billions in annual revenue despite economic slowdowns, inflation, and changing consumer habits. McDonald's remains a global powerhouse. Number eight. Fact number 8, McDonald's can influence entire markets. When McDonald's reports earnings, investors often use it as a signal for consumer spending trends and economic strength. That's why this earnings is so important. Number 9, McDonald's has tested AI drive-thrus and automation. The company is heavily investing in AI ordering systems, digital kiosks, and operational automation to improve margins. And finally, fact number 10, before we go into the earnings call, is this. McDonald's is one of the largest toy distributors in the world because of Happy Meals. McDonald's distributes more toys annually than many dedicated toy companies, making it secretly one of the biggest entertainment and merchandise machines in the world. There you go. 10 facts around McDonald's. I thought you might find interesting how you can read the markets. These facts are important. We just cover the earnings calls, not just because of McDonald's or individual stocks. We cover the earnings calls to learn about the broader market. This is why I'm always beating the market. I'm beating Buffett. I'm beating Berkshire Hathaway and the S&P 500 for 3 years in a row. I expect it to be 4 years now as well. Wasn't quite sure about that at the beginning of the year, but now I am. So there you go. That is it. Very exciting. We've got 15 minutes to go before the earnings call. This was the McDonald's build-up. I hope you enjoyed it. Okay, let's get straight into it. We've got a few minutes to go. Let's welcome our audience in. Don't need that on for a minute. Okay, let me go to the chat. And we got a new member, Tony Howley. Are you here? Let me know if you are here, and we'd love to welcome you into the show. If you are here this morning, let me know you're here, and we'll say hello to you. Good morning from Slim. Good morning, Slim, indeed. Good morning, Sir Joey. Good morning to you. And bounce back. I like McDonald's, but how did they become just as expensive as going out to a restaurant? That's wild. Yeah, I know. I've noticed that. I've noticed that. A lot of people have noticed that. However, though, you now need to go back to the restaurant, which you thought was more expensive, and you find that's gone up as well. I like Saltgrass, like a steakhouse place. It's like now a real considered purchase. It used to be, me and Leah could go out for a nice steak, good quality, 50, 60 bucks. It's not cheap, is it? It's not McDonald's, but it's a good restaurant. It's not a nice restaurant. It's not a posh restaurant. We don't put a suit and tie on or anything, but it's a good quality steak and we enjoy it. 50, 60 bucks. Now you can't get out with under 110, 120. Things haven't gone up the last couple of years. Apparently we're booming and everything's great. No inflation. Well, go to a local restaurant and you'll find out. So McDonald's still is a lot cheaper than that. So yeah, it's gone up, but nowhere near as much as your restaurant. Forget your posh restaurant. I just can't go to a posh restaurant. You go to a posh restaurant, you're talking $200-300 now. And it's like $200-300 just for a meal. Yeah, I don't know if I want to spend that. Do you? I mean, I can invest that and there you go. Anyway, okay, good day all. Good morning, Patrick Black. Good morning, William Myers, our #1 supporter on X. He reposts everything. He's amazing. He's got an amazing X account. He reposts everything. He's brilliant. Good morning, Martin and everyone. Lionel Rivers, good morning to you. Excellent stuff. All right, we are just a few minutes to go before the call. 13 minutes, in fact. So we're all buckled up, ready to go. Now, we've got a really exciting morning lined up for you because we've got a deep dive from our newsletter, IonQ. And we're going to do a deep dive analysis on IonQ right after this. Last night we covered it. A lot of people now looking into IonQ quantum computers. We had some 8,000 people watch the two streams, the vertical and the wide. 8,000 out of nowhere. Massive event. So another reason why we cover the earnings calls, we can see where the market's going. Not the ad. You might go, well, it's the ad revenue. No, it's not. Live events earn a cent per person. It's not about that. It's about learning where the markets are going. And IonQ is very interesting right now. Talking of which, I've got something I want to show you. Something we want to cover tonight. It's been booked in. One of you have done a super chat for it. So tonight is booked in. SOUN. Soundhound. Let's bring it on. Are you ready? Okay. I'm going to make a quick promotional video for Soundhound. Alrighty, let me just do that now. Here we go. Soundhound, tonight, earnings, we are covering it live. It's going to be a big event, this one. Soundhound earnings always draws a crowd. A lot of people looking at this, especially after last night. What was last night? Well, last night was IonQ, our biggest audience ever. We ranked #1 in the world for it. 8,000 people across our two streams, the vertical and the horizontal. Amazing. People are looking at IonQ AI, and that will play in nicely to Soundhound. No surprise, Soundhound's up. We rank #1 for this stock. Expect a big audience, full deep dive analysis. There'll be some information also accompanying it the day after the earnings from our newsletter, so you want to get that as well. But tonight, the 10 facts, the information, everything you need to know all about the business, Soundhound AI with the full AI breakdown and, of course, the full earnings from the company itself with live Q&A. Don't miss it. Soundhound earnings coming up tonight. We're going to be there. See you there. All right. So I'm going to send that up as a clip. We've got, how much time have we got? We've got a little bit of time. We've got 10 minutes to go. So McDonald's, back to McDonald's, MCD. I'm struggling to press buttons this morning. There we go. McDonald's, okie dokie. Let me just send this up. Pretty good how I can make the videos as we do it now. Just getting more and more efficient with it. It's really cool. Really love it. Let's have a quick look. Was that the right one? Yes, it was. Let me send that up there. So what I'm doing now is I'm putting together... Oh, that didn't work. Do that again. Putting together the event for later. And it still didn't... Oh, there we go. There you go. That's better. Well, that was quick. 1 second that took. Bloody hell. 1 second that took. Bloody marvellous. Right. Okie dokie. McDonald's earnings at 9 minutes away. So if you are investing in... Oh, I'm up 40% sound down, song for space. So you'll be interested tonight. Is it time to take profit? Well, only time will tell. I'm sure you'll let me know. But I would certainly consider that. I would certainly consider that. Anyway, we're just 8 minutes to go now before Soundhound earnings. Sorry, McDonald's earnings. What am I saying? I'm all over the place this morning. Okay. In fact, where's my 10 facts? Is that my 10 facts? No, that's not my 10 facts. Yes, it is. There's my 10 facts from McDonald's. Yeah. Yeah. Okay. I'm going to put those out as well. I got, if you follow me, ask William Myers. He'll go, yeah, I know all about it. I know all about it, mate. So where did that start? That started at 8 minutes. 8 minutes. Okay, 7 minutes to go before the McDonald's earnings. I'm excited this morning. This will benefit Coca-Cola, of course. Always does. It's a benchmark, and the fact they've beaten and it's up so much, it's always a winner. So we're focusing on that this morning. We've got NVIDIA earnings as well coming up shortly, and of course we've got the FOMC. The markets will be testing the new Fed. So that's going to be exciting, isn't it? I'm excited for that. Are you excited for that? So let's get ready. This is my position this morning. I'm up slightly on the market. There we go. There we go. We're up slightly. I think we're behind the S&P so far. If we look at the S&P, yeah, up 0.17. So we're behind the market today. That's what we've got, a coiled spring waiting for Coca-Cola to take off. Let's see how McDonald's trades first, and then you'll get a reaction to that. If we go through the markets, the S&P is up, like I just said. Virgin Galactic is down again today. Not good at all. Palantir up 1.61. Gold is up 0.92. Amazon is up 0.22. Apple up today, 0.31. Enphase Energy, love this, going to $100. Coca-Cola just down very slightly, nowhere near cheap enough to buy any more though. I'm up 2% on it on my recent positions. Johnson & Johnson, that's great, way over 200 now. Chevron Oil going down. Tesla up 1.82. McDonald's up 3.41. We're watching it live right now. We've got 6 minutes to go. Google, it reached the $400 target. That's what I gave it, right? There it is. We sold it just before there, though. We took our profit before there and moved it into defensive. It's made our target. We were right again. Microsoft, 417. Meta Platform, I give this an $800 target. Crazy, right? That's what I do. NVIDIA, this is 250. We're dropping back a bit now. It will go there, but 207. I'd buy this back again at 195, 190, but not otherwise. Walmart is now an AI play. Tilray Brands, no value whatsoever. Robinhood down very slightly today. I didn't buy it this time round because I know we're going to go lower on crypto. Vertical Aerospace up 0.37 today. Nice little bounce yesterday. All these EVTOLs yesterday, down 0.86. Joby, Arch Aviation up 0.51. We covered this on the show. We had the #1 analyst for this stock, for all this sector, by the way. Bitcoin, 80,000 now. XRP, 141. We're getting ready to take some profit. Ethereum is up 0.07. But right now, back to McDonald's. We have 5 minutes to go. Let's get ready for McDonald's. We're just about coming into it. I'm excited. Okay. Just 5 minutes to go. If you've just tuned in, please tap the like button and consider subscribing. That would be absolutely wonderful. Thank you very much indeed. Get ready to rock and roll. Hope I didn't just delete that. Tell me I didn't delete the sound town thing I just made. I think I did. Oh my God. It's when I say I can do multiple things at once, it sounds good, but I don't always pull it off because I make mistakes. Anyway, there we go. I just completely messed that up. But there you go. Yeah, completely messed that up, didn't I? Never mind. How long we got to go now? 3 minutes? Okay. 3 minutes to go. We're waiting for McDonald's. How on earth? You know when you put something in your trash and it says you can put it back, the put back button's disappeared. How's that possible? How come the put back? Oh, I see. It's inside a folder. Oh, okay. Just learned something. All right, 2 minutes to go. We're getting excited now. The McDonald's earnings is ready to rock and roll. We're all good to go. You can hear me doing 10 things at once. Trying to get ready for the next event for you before this starts. It's not always possible, but I'm trying. Okay. Let's get into it now. Let's bring up the McDonald's. This is what's coming up next, by the way. Straight after this today, we've got the IonQ event. Deep dive analysis after the earnings last night. So that should be interesting. I'm sure you'll want to join me for that. I expect that to be a huge event considering where we were last night. You watch, I'll be completely look silly. No one will show up. But anyway, 8,000 people last night were looking at that. So it's interesting to pay attention. We are running a poll on the show as well. Let me refresh it with 2 minutes to go. Is it a buy, hold or sell for McDonald's? Let's refresh it. This is called the Lucas Archie. It's more reliable than a Fibonacci. Let me give you the link to it. It's on the home page. It's the community page if you are a subscriber to the channel. There you go. There is the Lucas Archie indicator. So you're saying a buy, even though we're up where we are now. I was buying this at $200. Buy at 38%, yes. Hold 14%. Sell 27%. Undecided 21%. Make sure you always vote and interact with the Lucas Archie indicator. It's an important one. It's a lot, as I say, very powerful. You see it trending on Google and all sorts. It gives you a really good indicator of where it's going. Right, I'm going to refresh their slides in case there's any errors. Sometimes there is, so it's always worth refreshing. Okay, let's bring up the volume, pump up the volume, pump up the volume. There's the audio, you can hear it. Right, we'll just mute that. We don't want that to be blasting all over the place. Okay. Right, we're good to go. Here we have the McDonald's earnings. We are 1 minute to go. Very likely, as most earnings, they'll be 1 or 2 minutes late. That's the way it works. Don't worry about that. But we'll bring it to you the moment it begins. You'll be there ready to rock and roll. All right? Okay, get steady. I'm excited for McDonald's earnings. Should be good. Quick cup of tea. Get to hear from the CEO, the CFO, and understand the economy and where the markets are going. That is essential. It always amazes me that today on bro channels watching crypto, there'll be thousands of people being told they're about to get rich, and they've been sitting there for ages being told rubbish while they custodian their money with the creator or pay for training courses or watch nonsense. When if you just focus on the actual businesses and actual focus on earnings calls, you'd make money like I do every day. All my Discordians do, and yet we've got 90 people paying attention to what actually is going on. It's incredible. But it's the way, this is why 1% own all the money. That's why the rich get richer and the poor get poorer. The poor just keep walking straight into it every single time. And this channel tries to help people, but you can't help people sometimes. Right, let me just mute that now on my side so you can't hear it, but I can, so I can get ready for it. Okay. We're just waiting for the call to start. Stand by. I'm listening to the call. They're just playing music. The moment they start to talk, I'll bring it to you. So stand by for the McDonald's.
Hi. Hello and welcome to McDonald's first quarter 2026 investor conference call. At the request of McDonald's Corporation, this conference is being recorded. Following today's presentation, there will be a question and answer session for investors. At that time, investors only may ask a question by pressing *1 on their touch-tone phone. I would now like to turn the conference over to Mr. Dexter Combele, Vice President of Investor Relations for McDonald's Corporation. Mr. Combele, you may begin.
Good morning, everyone, and thank you for joining us. With me on the call today are Chairman and Chief Executive Officer Chris Kempczinski and Chief Financial Officer Ian Borden. As a reminder, the forward-looking statements in our earnings release and 8K filing also apply to our comments on the call today. Both of those documents are available on our website, as are reconciliations of any non-GAAP financial measures mentioned on today's call, along with their corresponding GAAP measures. Following prepared remarks this morning, we will take your questions. Please limit yourself to one question and then re-enter the queue for any additional questions. Today's conference call is being webcast and is also being recorded for replay via our website. And now, I'll turn it over to Chris.
Good morning, everyone, and thank you for joining us. This past quarter, we once again demonstrated that when we execute our strategy with discipline, we win. In Q1, we grew global system-wide sales 6% in constant currency, and global comparable sales grew 3.8%, with solid growth across each of our operating segments. Just as importantly, we gained market share in the quarter in nearly all of our top 10 markets. In a challenging environment, our system stayed focused on what we can control, delivering on the things that matter most to our customers: compelling value that brings customers in the door, breakthrough marketing that gives people a reason to choose McDonald's, and great tasting menu innovation that keeps us relevant and gives customers more of what they want. That's what going 3 for 3 looks like at McDonald's, and we believe that outstanding execution will continue to set us apart in any environment. While each pillar is powerful on its own, and even more so together, it all starts with value. At McDonald's, value has always been part of our DNA. As I've said before, and I'll say it again, McDonald's is not going to get beat on value and affordability. We've listened closely to our customers and adjusted along the way with a relentless focus on strengthening our value leadership. In the U.S., with unanimous alignment through the franchisee field votes, we recently evolved McValue to include an everyday affordable price menu with individual items under $3, along with a $4 breakfast meal deal. Those additions build on our meal deal offers throughout the day, and give customers clear, consistent options across day parts. We've been applying that same discipline internationally for quite some time, where the vast majority of our large markets offer both everyday affordable price items and meal bundles, giving customers flexibility and options that work for a range of budgets. This approach isn't new to us, and we know it works. We've listened closely to our customers and adjusted along the way, with a relentless focus on strengthening our value leadership and leaning into our role as a bright spot for customers in what continues to be a challenging environment. That's exactly why the U.S. relaunched Extra Value Meals last September. As we said at the outset, we're measuring success in two ways: our ability to grow share with low-income consumers and our ability to improve value and affordability scores. I'm proud to say, as we look back from when we launched the program to the first quarter, that we've delivered on both, reinforcing something we know well at McDonald's. When value is clear, consistent, and supported by strong marketing and menu execution, it moves the business. That takes us to marketing. Paired with a strong value foundation, marketing remains a powerful growth lever. We saw that this past quarter as teams around the world created moments of joy for fans and delivered campaigns that resonated with customers across different interests and occasions. Our Friends campaign connected with longtime fans across several international markets by tapping into nostalgia and collectibles. We partnered with the Super Mario Galaxy movie on a Happy Meal tied to the film's release, creating a big family occasion around the brand. And most recently, we launched the K-pop Demon Hunters partnership with Netflix, a campaign built for a more digitally native customer, combining a dual day-part offerings with digital activation in the McDonald's app. In the U.S., even in light of comparing against the highly successful Minecraft movie promotion last year, the K-pop Demon Hunters partnership did what we expected. And as with past culturally relevant IP, like last year's Minecraft and Grinch campaigns, we're scaling the event globally. That's one of McDonald's real advantages. We can take insights that resonate locally, turn them into brand moments customers want to be a part of, and scale them in a way that we believe very few companies can. And when we do that well, marketing does more than create buzz. It drives traffic and strengthens the underlying momentum of the business. Lastly, menu innovation. With our category focus, the system is successfully delivering the great tasting food our customers expect, quickly and efficiently. There's no better example than the beverage category. In Q1, Australia successfully executed the beverage test, building on learnings from last year's U.S. pilot. We're continuing to build real momentum in the category, with both Germany and Canada launching new beverage platforms a few days ago. And yesterday, all U.S. restaurants nationwide began offering 3 different refreshers and 3 crafted sodas as part of our new U.S. beverage platform under the McCafe brand. The soft sell launch results over the last week are encouraging, and we're looking forward to introducing different flavors and Red Bull-infused energy drinks throughout the year. As I said earlier, the strategic combination of a strong value foundation with culturally relevant marketing and focused menu innovation delivers outsized impact. Across key markets, we're seeing consistent 3-for-3 execution translate into sustained performance. Australia is a clear example of this playbook in action. Value offerings such as McSmart Meals and the Loose Change menu provided compelling flexibility and choice and drove traffic into our restaurants. This quarter's Friends activation created excitement for our fans. Beef and chicken full margin LTOs drove comp sales performance in the quarter, and the recent beverage test was met with great customer reception. By going 3-for-3, Australia delivered mid to high single-digit comp growth and extended a third consecutive quarter of market share gains. Before I conclude, I want to provide an update on the impact of the war in the Middle East. While the direct impact on our operations in that region did not have a material impact on our total company results in the first quarter, the operating environment remains volatile. Our teams are focused on supporting our franchisees, mitigating costs within our control, and protecting the long-term health of the business in the region. We're extremely proud of the way our system continues to consistently show up for customers in every corner of the world, supporting both the communities in which we do business in and our teams, highlighting time and time again the strength of the McDonald's brand when our system comes together. With that, I'll turn it over to Ian.
Thanks, Chris, and good morning, everyone. As Chris just mentioned, overall, we delivered another solid quarter with global comparable sales growth of 3.8%. Our results reflect consistent execution across our system, even as we continue to navigate a challenging environment. Starting with the U.S., comparable sales grew 3.9% for the quarter, and importantly, we delivered positive comparable sales and guest count gaps to our near-in competitors and maintained market share. As we discussed on our last earnings call, we exited 2025 with good momentum, and the U.S. system continued to build on that momentum in the first quarter. Value continued to contribute meaningfully to our growth throughout the quarter, including our extra value meals, which have performed well since the relaunch last September. Financial support to franchisees under the EVM relaunch program is expected to be below our initial estimate of approximately $35 million as the program continued to see positive momentum. Together with the broader McValue platform and full margin promotions, EVMs continued to help drive incrementality. While the EVM financial support concluded at the end of March, EVMs remain a core part of our menu offering and continue to provide customers with a compelling and consistent discount versus a la carte pricing on their core McDonald's favorites. On the menu front, the U.S. executed limited time offers across both chicken and beef, which helped maintain share in the highly competitive chicken category and drive market share gains in beef for the quarter. Campaigns like Hot Honey helped build further credibility with consumers and excitement within our chicken portfolio through the introduction of a new sauce, while the full margin Big Arch promotion introduced in March generated strong interest and performed in line with our expectations. As Chris noted, we've worked collaboratively with franchisees to ensure we continue to provide customers with the most compelling value as we adapt our offerings to meet consumers where they are. With unanimous approval through the franchisee field votes, we launched the revamped McValue platform in mid-April. The new under $3 menu features well-known a la carte items available throughout the day. Similar to how we relaunched extra value meals, we kick-started the new program by spotlighting two items available in the under $3 menu with a nationally advertised $2.50 McDouble and a $1.50 sausage McMuffin. Likewise, the new $4 breakfast meal deal now complements the $5 McChicken and $6 McDouble rest of day meal deals that remain on the McValue platform. Together, the under $3 EDAP menu and the meal deals provide clear, compelling price points across all day parts, similar to what we've been offering successfully in nearly all major international markets. As with any new program, we know it may take time to build awareness, but early indicators on McValue's performance since the changes were introduced a couple of weeks ago are in line with our expectations. Turning to the international operated markets, comparable sales grew 3.9% in the first quarter. In many of our top international markets, QSR industry traffic contracted, yet we gained share in nearly all of them. Our results were driven primarily by strong performance in the UK, Germany, and Australia. These three markets continue to demonstrate disciplined execution across value, menu, and marketing, with each market gaining share again this quarter and delivering comparable sales growth in the mid to high single-digit % range. Our value offerings are resonating as we continue to evolve them to meet local consumer needs. In the UK, for example, the team strengthened its meal deal strategy with the introduction of Meal Deal Plus in January, which provides customers more flexibility to choose from a range of core and side items for only £5.59. UK customers responded positively, and the revised offer drove higher incrementality than the previous £5 meal deal. And in Germany, the McSmart platform continues to perform well, while a marketing campaign strengthened our brand's value perceptions by embedding affordability into familiar, real-life moments, speaking to the importance of both experience and priced overall value. With respect to menu innovation, several large burger campaigns across the UK, Germany, and Australia delivered strong results in beef. In chicken, the Chicken Big Mac in Germany generated incremental demand. And in beverages, Australia's test of our new range of offerings performed very well, and we're excited about Germany's recent beverage platform launch. From a marketing perspective, the Friends TV show Theme Promotion, which ran in both the UK and Australia, added to each market's solid results and serves as another example where we're sharing ideas and scaling campaigns across markets. We also featured this campaign in Italy in the first quarter. Speaking of Italy, the market celebrated its 40th McDonald's anniversary in the first quarter. To mark the occasion, Italy brought back several iconic menu items, including the 1955 burger, the chicken bacon onion sandwich, and the Royal Deluxe burger, all which have deep roots in our brand's history and continue to see strong customer demand. These full-margin LTOs helped Italy extend its streak of consistent market share gains to more than 2 years. While the IOM segment continued to deliver solid growth in aggregate, an example where performance is not meeting our expectations would be France. France's performance highlights the importance of consistent discipline in our execution of value. As a first step, the system aligned on a new value platform that just launched last week, reflecting a shared commitment to improving performance even amid a contracting industry environment. Turning to our international developmental licensed markets, comparable sales grew 3.4%, led by continued strength in Japan, reflecting great local execution and brand relevance. In China, we maintained share in the quarter, and while we expect the macroeconomic pressures to persist, we continue to execute against our strategy to capture the long-term growth potential of the market. We remain on track to open approximately 1,000 new restaurants in China this year. Turning to the P&L, our solid top-line performance drove adjusted earnings per share of $2.83, which included a 13-cent benefit from foreign currency translation. On a constant currency basis, this represents a 1% increase versus the prior year. We generated more than $3.6 billion in restaurant margins during the quarter, and our adjusted operating margin was 46%, highlighting the resiliency of our business model. However, our U.S. company-operated margins in the quarter were not acceptable. We're actively addressing opportunities to improve performance and revisiting the optimal franchisee versus company ownership balance to maximize system value. Based on current exchange rates, we expect foreign currency to be a full-year tailwind to 2026 EPS, totaling in the range of 20 to 30 cents. As always, this is directional guidance only, as rates will likely continue to change as we move throughout the remainder of the year. In regards to the remainder of the year, we are reaffirming our full year 2026 financial targets as we outlined in February. With respect to food and paper inflation, our supply chain teams, along with our world-class supplier partnerships and hedging strategies, position us well to navigate near-term cost pressures and increased volatility resulting from the war in the Middle East. Longer term, we believe there is an increased risk of higher cost inflation due to ongoing global supply chain disruptions. While we expect the external environment to remain challenging, we're focusing on what we can control, executing consistently across value, menu, and marketing, and leveraging the financial strength and scale of our global system. And with that, let me turn it back over to Chris.
Thanks, Ian. This quarter reinforces something important. In a challenging environment, we believe McDonald's can still do what very few brands can. We can lead on value, we can show up in culture in ways that matter, and we can keep bringing customers menu news that gives them more reasons to choose us. That's what this system delivered in the first quarter, and it's why I feel very good about where McDonald's is headed. Our history has been defined by our ability to remain green and growing. And what gives me confidence is not just the momentum we've built, it's the strength of this system and our ability to keep evolving with the customer without losing what makes McDonald's distinctly McDonald's. We'll share more with the McDonald's system on what's next when we come together in June for Worldwide Convention. And later this year, We look forward to sharing more with all of you at our Investor Day on September 23rd in Chicago. With that, we'll take questions.
Thank you. And as a reminder, if you are an investor and would like to ask a question, please press star followed by the number 1 on your telephone keypad. We ask that you limit yourself to one question and re-queue for any additional questions.
Our first question today is from Dennis Geiger of UBS.
Thanks. Good morning, guys. Following another solid U.S. sales performance in the quarter, can you talk a bit more about how you're thinking about the U.S. sales trajectory over the balance of 26, given some of those key sales drivers that you identified across value and marketing and menu innovation, but also against the currently challenging macro backdrop in the U.S.? Thank you.
Yeah, thanks for the question, Dennis. You know, as I look at the marketing calendar that they've got for the U.S. for the balance of the year, I feel very good about the plan that they have in place. I think clearly we're going to expect to continue to benefit from the McValue program. That's locked in through the balance of the year. And then we have, I think, a great lineup of menu innovation as well as marketing news. Certainly beverages is something that we're expecting is going to be a tailwind for us, for the business, for the balance of the year and hopefully longer than that. You know, what's obviously going on is the macro environment and consumer sentiment. That's not new news, but I think probably it's fair to say that, you know, it's certainly not improving, and it may be getting a little bit worse. How that plays out in all of this, you know, I think is an open question. But as Ian said in his comments, you know, our focus is on what we can control, and on that score, I feel very good about the balance of the year.
Hey, morning, Dennis. I might just tag on to Chris and just knowing I'm sure it'll be a focus for lots of the Q&A today, just talk a little bit about kind of Q2 and beyond. You know, I think as you heard us say up front, I mean, we've had a solid start to the year, and I think we're most pleased with is just the consistency of our performance across all of the three operating segments. The fact that we took share in the majority of our largest markets in the quarter, I think, is proof that we've positioned the business well to do well in any kind of environment, even if that environment becomes a little more challenging than it has been. I think just speaking a little bit to kind of Q2 and beyond, I mean, I think we expected April to be a difficult comp month, driven by, you know, the really successful global Minecraft program that you've all heard us talk a lot about. And as we had planned, comp sales in both the IOM and the U.S. segment were slightly negative in April. So I think as a result of that, and as we had planned for in both the U.S. and IOM segments, we expect in Q2 that we're going to see a meaningful deceleration from the 3.9% that we put up in both segments in Q1 from a comp perspective, which reflects the soft performance in April. But we also expect for each segment comp sales to accelerate on a 2-year stack basis. For IDL, comp sales growth in Q2, we expect to decelerate from the 3.4% in Q1, primarily reflecting a little bit what Chris was talking about earlier, just the volatility, obviously, of conditions in the Middle East and some markets in Asia, but also to accelerate slightly on a 2-year basis. I think just to be, clear, I mean, obviously with the difficult April comp now behind us, we're confident in our underlying momentum, driven by what Chris was just talking about, the strength of value and affordability, which we think we've really got right. You've heard recently about some of the adjustments we put in place in April as part of McValue 2.0. And then the lineup of activities through the rest of Q2 and into the rest of the year, like the recent beverage launches that we've talked about in Germany, Canada, and the U.S., and then, of course, our FIFA partnership in June. So we certainly feel like we've got the business set up well, irregardless of the conditions. And as Chris said, we're really focused just on making sure we continue to strongly execute.
Our next question is from Brian Harbour of Morgan Stanley.
Yeah, thanks. Good morning, guys. I guess just on the on the value point, it seems like you're kind of continuing to revisit it here. I guess could you just elaborate on sort of the need for another iteration? How often do you think you will change that? And then outside the U.S., right? I think you alluded to, France, for example, where you also need to revisit that. What has made certain markets, more or less successful on value, given that many of them have had things in place recently?
Sure. Well, let's start with where we're at with McValue and the components. There's really two core elements that we look at. One is the meal deal program that we have, and that's been in place for over a year. And then we also have just recently we launched this, what we call everyday affordable price point, or EDAP menu, which is the 10 items for under $3. And what our experience has shown us in markets around the world, as well as a fair bit of work that we've done, is you've got to have both of those components in place. You need to have a meal deal offering there to be able to drive interest and excitement around some of our core menu items. But you also need entry-level price points for those folks who are maybe a little bit more stressed around affordability and are looking for, what can I get for $3 or less? And so, hats off to the U.S. They've got that in place. In rest of world, most of our IOM markets, we had the same construct. And in fact, that informed what we've done in the U.S. France was the one exception. We did not have as strong a program as we needed to in France on both dimensions of that. And so what Ian referenced is getting that put in place. If I look at sort of our overall value and affordability scores, we've made a ton of progress. If you went back 18 months or so ago, there were places where we were seeing that we were starting to have declines in terms of perception there. Now, we were still better than competition, but our leadership gap was narrowing. And if you look at what's happened more recently over the last 6 months or so, we've seen a significant improvement in all of our value and affordability scores to the point where, I think we're in great shape on value and affordability. Now, because of the operating environment that we're in, thank God we've got that in place, because I think you need in this environment value and affordability to be a strength. And I'm happy on behalf of our system to say that we've got value and affordability now, where I think it's a real strength of our system.
Hey, I'm just going to hook on that one, Brian, just to add to what, or emphasize maybe a couple things that Chris talked to. I mean, I think in this environment, agility is going to continue to be key, and I think that's what our business is demonstrating. I think as you've heard Chris and I both talk about repeatedly, we're not going to get beat on value, and I just would echo Chris's comment on credit to the U.S. business that they have listened to consumers and really leaned into the areas of opportunity. And I think that's one of our key advantages is our strength and scale and our ability to kind of, lean in proactively to what consumers are expecting and needing from us. And I think we're really confident in the setup in the U.S. now because, as Chris talked about, we've had that model in place in most of our international markets for some time, and we know it works. And France is an example where if you don't stay disciplined and keep being sharp on value and have a winning formula, that can get away from you, and then you've got to come back and get after it again. So we feel really confident, as I talked about earlier, that we're positioned well no matter how the environment around us continues to evolve.
Our next question is from John Ivankoe from JP Morgan.
Hi, thank you very much. The question really is around system optimization. And, you did mention that in the context of U.S. company store margins, but I'll even pivot even forward and look at company store margins for the IOM business as well. So, it seems like both of those markets might have opportunity to refranchise. I mean, the stores would actually potentially create more from a P&L perspective as a franchisee than a company store. So just, kind of comment on that, how big of an opportunity we may have to refranchise company-operated stores. And in that context, especially if refranchising does occur, should we be rethinking previously set development targets in the U.S. and IOM, as margins have been under relative pressure in both of those segments since the initial guidance was given, I think, in late 2023? Thank you.
Hey, morning, John. Thanks for the question. I think, as I kind of said in the upfront remarks, our U.S. McOpCo performance is not acceptable. I think we were very clear on that. I think we have opportunities, although I would highlight, just because you referenced it, we saw McOpCo margin growth in our IOM segment in the quarter, and I would say that's in a set of conditions where the IOM markets are generally facing more inflation. So I think it goes back to what we've talked about pretty consistently. When we are able to generate solid top-line growth, we feel confident about our ability to grow margins over time. I think at the end of the day, it's pretty straightforward, and you've alluded to this. We have a choice. We make a decision, obviously, when we own and operate a restaurant directly, and that decision is based on generating a strong return and generating a strong system outcome. And if we can't deliver that, I know we've got a lot of great owner-operators in the U.S. or around the world that can run those restaurants well and generate strong outcomes for either themselves or for the overall business. So I think we are going to be very clear and disciplined in how we make those decisions, looking at what's best for the overall system. I think in regards to new restaurants, what I would say is we still have a lot of confidence in our ability to grow. But again, it's as we've emphasized for the last couple of years, our primary decision matrix is based on delivering a strong return for McDonald's and a strong return for the owner-operator that's going to own and operate that individual restaurant. And if we can't deliver a strong return, and certainly we're seeing more inflationary pressure, I think, with what's going on in the war in the Middle East and kind of the ancillary impacts on that. If that means that an individual restaurant no longer meets the right return threshold, then we're going to make those decisions accordingly. I think overall, we still feel confident in our ability to kind of get to about 50,000 restaurants by the end of 2027.
Yeah, and I would just maybe underline a couple points that Ian made. One is on McOpCo, or frankly, it's any restaurant in our system. We're always looking to put the restaurant in the hands of the best operator. And so I think certainly the performance in the U.S. right now relative to franchisees would indicate it's not being run as well as it could be. And so it's either on us to fix that, or we're going to find franchisees who can run the restaurant better. And if you look at the margins that our franchisees, the restaurant level margins that they're earning on their own restaurants, clearly there's a lot of upside versus what the McOpCo performance was in the quarter. And you think about development, I would just say to build on Ian's point, we are relooking at the pipeline in light of what we think are going to be now the new construction costs as a result of some of the supply chain challenges. And if that means that some of those restaurant locations that are in our pipeline no longer make sense, they'll drop out and we will adjust accordingly. But as Ian said, everything that we're doing around development is about getting good returns. And if we don't feel like we can get good returns, we're going to drop those out. We're not chasing an absolute growth number, but we do see significant opportunity for us on development still. Next question is from David Tarantino from Baird.
Hi, good morning. My question's about franchisee profitability, and I was hoping you could give us an update on what those trends look like in the U.S. in light of the McOpCo margin performance. Sounds like maybe there's a unique issue there that's not affecting the franchisees, but just wanted to confirm sort of what the profitability there looks like. And then secondly, I was hoping you could comment specifically on IOM franchisee profitability in light of the spike in energy prices. I think maybe back in 2022, you had to provide some support there. So just wondering what the outlook for that dynamic is. Thanks.
Sure. Well, Well, no surprise with the inflation that we're seeing in the market. There's certainly a lot of pressure that we're trying to navigate with franchisees around their own profitability. U.S. cash flow last year, we've talked about that previously, but it was stable. But as we head into this year, there's certainly concern around franchisee profitability, not just in the U.S., but in IOM as well. And what we've talked about with franchisees, our system, everybody needs to be successful in our system. And so we're keenly focused, along with our franchisees, on how do we make sure that we can navigate some of these cost pressures and the other investments in the business, and also make sure that we're able to grow franchisee cash flow. But beef inflation is just one example, particularly pronounced in Europe, but also a factor in the U.S. For a portfolio like ours, that absolutely puts pressure on this. And so, I think if you were to talk to our U.S. franchisees right now, they're feeling under pressure from a cash flow standpoint. I think you'd find the same thing if you talk to our IOM franchisees. And we're working, as we always do with our franchisees, to make sure that, all three legs of the stool are successful.
Yeah, David, good morning. Just maybe let me add a bit to what Chris has said, and just a couple things. I think on commodity costs, just to be clear, because we've reiterated our guidance, and part of the assumptions that went into the guidance that we issued at the beginning of the year was obviously commodity inflation from a food and paper perspective, which in the U.S. we expect to be in the low to mid-single digit range, and in IOM mid-single digit. So I think we feel pretty confident in our ability to navigate inflation through 26, partly because obviously we've got a fair bit of hedging in place, both on food and paper and on energy. So that gives us a confidence kind of in our ability to navigate what we're seeing right now. And obviously we've got the strength of our supply chain system, our world-class suppliers who really help us to kind of navigate even some of these pressures like Chris alluded to on beef, for example. I think, obviously, based on what we know today, I think we certainly think there's more potentially inflation on the way as we get to the end of 26 and into beginning of 27. And obviously what we're continued to focus on is driving that strong top.
Do you realize what you're hearing? This is confirmation of the recession, of the pullback. That's why we're defensive.
Kind of the external conditions.
This is why we cover these earnings.
And of course continue to manage the cost impact on the business as we do that.
Next question is from Greg Frankfurt over at Guggenheim.
Hey, thanks for the question. I just wanted to ask maybe what you guys were seeing in performance of higher income and lower income customers. I think we're getting maybe mixed reads from, companies in other sectors. And you were one of the first ones to call out maybe some pressure in 2024. And I want to see how that might be evolving. Thanks.
I think at a macro level, it's largely unchanged in that the higher income, continues to have very resilient spending, and that is true for our business as well, where we're seeing, solid growth, good growth with higher income, and also gaining share with higher income for us. On that lower income, while the declines are not as pronounced as they were maybe 6 or 12 months ago when we were talking about high single digit, the low income is absolutely still declining. Now, I think some of that, is probably due to lapping. I think also in our business, we would look and say, we think we've recaptured some of those low income consumers because of our value program. But, clearly when you have elevated gas prices, which is the core issue that, I think we're all seeing about it in the press right now, gas prices, inflation on that, that is going to disproportionately impact low-income consumers, and so we expect the pressures there are going to continue.
Next question is from Sara Senatore with Bank of America.
Thank you. I wanted to go back to FIFA, the World Cup. I think, you sponsored it before, obviously, so you have a good read on what it does. I think in my recollection, it was an important driver of digital adoption, but maybe not, in aggregate as much.
Listen to this, Coca-Cola.
Two parts. One is that the right recollection? And two, given that you have loyalty now, is this an opportunity, to still see the kinds of increased frequency that you have previously? I think you've talked about kind of doubling frequency when people join loyalty. So just kind of your historical
Pay attention to this.
Experience with FIFA and kind of what you're expecting going forward. Thank you.
Sure. Well, we're very proud of our 30-year plus association and sponsorship of the World Cup, and that will continue this year. In terms of performance, it really depends on country by country. I think your question, Sarah, is probably focused on the U.S. And the big benefit that we have this year, of course, is that the World Cup is in North America. And it's also going to be something that happens in stadiums across not just the U.S., but Canada and Mexico as well. And so I think that's something that for us, we see as a real benefit. And the U.S. team, as well as our Canadian team and Arcos Dorados, have an exciting marketing calendar that's lined up that we think is going to have the potential to really drive performance in the restaurant. So I think because of the fact that this year we're in North America, it's a little bit difficult to extrapolate from other years where it wasn't in kind of, our big U.S. market. But we're optimistic about what we think it's going to do this summer.
Yeah.
Next question is from Dave Palmer over at Evercore.
That was important. That's what I'm banking on.
Hey guys, this is Elliot on for Dave. This is the second quarter in a row.
See what you get from these earnings
UK
calls.
Strength. The turnaround has been remarkable, both in the speed it has been achieved and the fact it was done in what seems to be a very challenging backdrop in the region. Are there any lessons you can take from the wins you have been able to generate in the UK and apply those to the US and France? Thanks.
Yeah, take out the chemicals.
If there's anything else to add, I'll jump in.
Yeah, morning, Elliot. Look, I think it's a few things. I don't think it's necessarily anything new, but it's just a reminder of, I guess, discipline and focus. Obviously, it starts with having the right leadership in the market. We've made a fair bit of change there, and we feel really confident that we have strong leadership in the market now, which I think has been instrumental to building confidence both internally with our franchisees and externally with consumers. I think the UK has really done a nice job of adopting that formula of having a really strong value and affordability foundation, evolving that to meet the needs of consumers in the market as the context has kind of continued to shift. And then doing a great job of kind of brand activation combined with, exciting menu news. The UK has done a number of campaigns, whether that's kind of what we call our menu heist campaigns or kind of favorites from around the world to other exciting activations. And they've done that in a way, I would say, consistently to kind of get that holistic formula to come together very, very well. And they're taking share, which is the ultimate proof point of how the actions are kind of resonating with the consumer. And I think it's obviously strong leadership, and then it's consistency of execution. And I think us having impatience to make sure that if that's not the case, we act quickly to get it in place.
The only other thing that I would add, the UK, as I think about the IOM markets, was probably a franchisee profitability there was probably under the most pressure of any of our large markets. And if we look back, I think probably it's fair to say that the team was overemphasizing traffic at the expense of franchisee profitability in some cases. And we've got a much better balance now. Franchisees have a clearer line of sight to how we're also going to be growing franchisee profitability. And that just drives much tighter system alignment, which then allows us to do all the things that Ian was talking about. So that would be my only other add.
Next question is from Jeff Bernstein over at Barclays.
Great. Thank you very much. Just wanted to follow up on that U.S. ownership structure conversation. I know you mentioned not being happy with the company operated margin. Seemingly that's despite the solid top line that you delivered in the quarter, for example, which I think was what you noted was kind of needed to drive that margin. So I'm wondering if you can offer some color on the primary issue in terms of not being well run enough or
very aggressive management from McDonald's.
Not profitable enough. Anything you can share in terms of the pricing you're taking? Otherwise, it does seem to imply.
I mean, there's a lot of different things. I think if I were to simplify U.S. McOpCo performance, it was investing in labor, additional labor,
at the same time that they were probably being even more restrained around pricing. And so when you are adding labor to the restaurants and you're also not passing through some of the costs because you're sort of being overly conservative around pricing, you end up having the performance that we've talked about here. Now, those are fixable, but I think the broader question for us that Ian was discussing is having confidence that we can be running, that we are the best operators of those restaurants. And we're working closely with the U.S. team as we are in every other market. We'll continue to kind of evaluate that. And I would say if we're going to make any changes on that, that would be a topic we would talk about at Investor Day.
Next question is from Andy Bearish over at Jefferies.
Yeah, hey guys, I wonder if you could talk a little bit more to the beverage launch and maybe what caused you not to use, kind of Red Bull and energy as part of the initial launch right now?
Sure. Well, we're really excited about what we're seeing so far. Yes, it's early days, but you get a sense sometimes of these things, even in early days of the buzz, and not just in the U.S., but we're also simultaneously right now launching in Germany and seeing great kind of consumer reception on that. I think as it relates to, what are all the various products that we launch with, there's really two things. One is just operationally being ready in terms of launching the beverages, and there were some things that we needed to do in partnership with Red Bull to be able to meet the demand that didn't line up perfectly with this May launch, but it also gives us an opportunity to re-hit the platform, which we'll do sometime later this year. So, it's a combination of operational readiness and also our desire to continue to have new news to drive customers into this beverage platform.
Next question is from Jon Tower at Citi.
Great. Thanks for taking the question. I want to go back to the comments regarding development and, the idea of examining the cost to build given the supply chain challenges. And obviously it sounds like on the horizon, there's a new potential remodel cycle coming for the U.S. business. So I'm just curious how we should think about that dynamic playing into a potential remodel cycle. Are you looking at things a little bit differently given the cost? Would you have to maybe commit more capital on the company side for franchisees to buy into some larger remodels that might be coming?
Sure. Well, I'll start at a high level, and then Ian can cover anything I miss. But you're right that we're in the midst of entering into a remodel cycle, and it's not just in the U.S. I'd say the same thing applies to IOM as well, which is we're now about a decade post really making EOTF, or Experience of the Future, a big remodel program that we first started in IOM and then we brought to the U.S. So, in our business, every 10 years, the expectation is that our franchisees will remodel their restaurants as part of just continuing to make sure that, they look great and offer the customers the experience that they do. So we're naturally heading into right now that remodel cycle. And we're taking the opportunity as we approach that to also think about, are there any other things that we need to go do around this business to make it set up for the future? Certainly one of the things that we've seen over the last, several years is just the growth of digital, the growth of delivery. That means that the kind of customer flows or customer journey in our restaurant looks a little bit different, how might we adjust that, et cetera. So we are certainly working with franchisees to think about what does that, restaurant of the future need to look like. There may be partnering on aspects of that, but, typically we don't partner on remodels, as part of just the regular updating of the business. But if there's specific sales driving things on top of that, that makes sense for us to partner on, we would take a look at that. And I would imagine if we had, more to share on that, that would be another topic we could cover with you all in September.
Yeah, I think Chris has covered all the bases. I mean, I think the key is anytime we get into kind of these more significant reinvestment cycles, we're very, very thoughtful to look holistically at how we can kind of get the most out of the investment. And that obviously, a bit to your point, John, in this case is just making sure in this environment we're really confident that there are enough and the right levers to drive growth so that everybody, the franchisee obviously firstly gets a strong return on their investment. And if we are going to support elements of that investment, as Chris alluded to, sales driving elements, that we're also getting a strong return on any support that we may put behind that. So I think that's pretty normal course, but it's certainly a good time for us to be looking at that, particularly in the U.S. where we've got a big investment cycle ahead.
Next question is from Lauren Silberman at Deutsche Bank.
Thank you very much. I wanted to just follow up on the comp expectation for 2Q. I understand the April lap, but I guess do you expect the balance of the quarter to rebound back to where you were running? And then just more broadly, do you think you're seeing any discernible impact from the rising gas prices on the underlying business? I know you mentioned low income will remain pressured, but have you seen a step down, I guess, since gas prices have accelerated globally?
Well, hi, Lauren. Let me start, and I'm sure Chris may want to weigh in here. I think as I said earlier, April is isolated and discrete because of the lapping of Minecraft. We just wanted to be very clear to kind of call that out because it is quite a unique month. And as I said earlier, I think we feel very confident about the lineup of activity and the underlying momentum of the business with all of the things we're doing, including obviously the moves we've made on value and affordability. I mean, I think the environment around us, as Chris talked about earlier, I think continues to be challenging. But as also he said, it's not new, and obviously our focus is on what we can control. And as I said earlier, we think we've positioned the business well and well to win, irregardless of the environment. Obviously, higher gas prices, as he talked about earlier, are not going to be helpful, particularly for lower income consumers who are already, I think, under pressure. But we think we're offering the right choice and affordability on the menu that's going to appeal to consumers, whether across all income cohorts. And obviously, that's always our goal.
Yeah, the only other thing I would add, I guess, to this point about, do we expect the momentum to continue as we get past April? Certainly our expectation is, as we've been doing, that we're going to continue to gain share. And so if you look at May and June, our expectation is that we should, in our major markets, be gaining share. Now, that share growth against, what is the industry growth? I think that's an open question. Whether there's been slowing or not, I don't know if there's enough data at this point to really give you a definitive answer on that. But certainly, consumer sentiment is heightened anxiety, let's just say, and it may have an impact. But our focus again is on controlling what we can control, and our expectation for continuing momentum around share growth. We're expecting that to continue.
Next question is from Andrew Charles over at TD Cowen.
Great, thank you. Ian, you talked about the commitment to get to 50,000 restaurants by 2027, but I'm curious, given the state of cash flows in the U.S. and IOM that you've talked about, is it right to think that IELM is going to really be driving a lot more and pulling a lot more of its weight than you originally expected at the Investor Day a few years ago?
Yeah, morning, Andrew. Well, I don't think we're expecting a kind of a shift in the mix. I mean, as you know, IDL already makes up the majority of our openings just because of the size of the opportunity in a lot of those developing markets like China or elements of Asia, at Latin America, et cetera. And I think, our partners continue to be optimistic about the opportunity for growth. And in those markets, a lot of them, you already have conditions where you've got to be very, very sharp to get good returns. So I don't think there'll be a significant shift. I think for all of us, though, a bit to what Chris and I talked to earlier, we just have to stay sharp on making sure we feel confident in our ability to deliver returns. And that's, I think, ultimately what will be any shorter-term adjustment. I think the long-term opportunities in all of our markets, we still remain very optimistic about, and we're going to stay focused on that.
Yeah, the only thing I would add, I think sort of implied in your question was that cash flow pressures somehow affect our system's ability to invest on new restaurants. And
I would just say, we have a tremendous amount of financial firepower in our system, despite some of the pressures that exist in some markets with franchisees on cash flow because of inflation. Their overall financial situation, when you look at debt levels and everything else, we're in a really good spot there. And so, I have no concerns about our ability, when it makes sense, when we can get good returns, to continue opening restaurants at a strong pace. That's going to be ultimately what drives these decisions because we've got plenty of capital to spend if we need it and we see good opportunities.
Our next question is from Danilo Gargiulo at Bernstein.
Great, thank you. I was wondering if you can share your thoughts on what you're seeing on the chicken category, both nationally and internationally, and perhaps what has been the evolution of your market share and the competitiveness of the category, and more specifically, whether the beef prices being more elevated is driving consumers to be eating more chicken mix for you and in general for the rest of the industry. And any thoughts that you have on the evolution of beef costs would be great. Thank you.
Sure. Well, as we've talked about, and I know you are well aware, Danilo, the chicken category is bigger than beef globally, and it's growing 2 times faster. So it's something that there's a ton of opportunity. And if you think about beef, where we have, call it a mid 40% share, our share in chicken is, call it high teens. So the opportunity, the headroom for us in chicken is really quite significant. And I'm pleased with how our system's performed over the last several years around chicken. We've gained significant share. I don't have the number in front of me, but it's probably close to 2 points of share that we've gained in chicken over the last few years because of all the work that our system has been able to do on that. So we're very excited and bullish on that. Because of the underlying growth, you're seeing everybody else is also excited about it. And so there's certainly a lot of activity happening in chicken across the industry. For us, it's going to continue to be a point of focus and a point of priority. And I do think it's a fair thing to point out that when beef prices are as elevated as they are, chicken becomes a much more attractive value opportunity relative to beef. And I do think that that's something that's playing in right now. And so, how that continues or plays out in terms of its growth, it depends largely on how long these beef prices are at these sort of historic highs. But certainly right now in the environment that we're in, I think chicken is benefiting relatively to its better cost position relative to beef.
Our next question is from Chris Carril over at KeyBank.
Hi, thanks for taking the question here. So I wanted to ask about your advertising focus and marketing message for the balance of the year, maybe with a specific focus on the U.S. Can you expand a bit more on how you're thinking about balancing the messaging around McValue in light of the current backdrop, alongside messaging on new and perhaps more premium menu innovations such as beverages?
Yeah, I think your question is kind of hinting at the fact that it needs to be a balance, and we can't be over-torquing on value at the expense of margin-driving initiatives. At the same time, you need to have a strong value program in place to be able to generate the traffic and offer those opportunities for trade-up and everything else. And so, as I look at the U.S. calendar, obviously I'm not going to share the details of that for competitive reasons for the balance of the year. But I think that U.S. team, working closely with our franchisees, has a good balance on their marketing calendar.
That's it for today, folks. If you need any follow-ups, please send me an email or send it to the McDonald's IR inbox, and we'll talk to you later. Thank you.
There we go. The McDonald's earnings. Learn a lot there. Kind of sort of cementing what I've been saying about inflation and recession and everything else. Cautious next year, well, end of this year. So great right now, but this is why I've gone defensive. That's what we learned from that. So good business, but still some concerns going ahead. There's going to be a pullback. There's no doubt about it. Those that just keep thinking it's going to go up forever, you're about to lose all your money. So be careful. Now, we've got a massive day today. One of our busiest days ever. We've got your analysis you've asked for, legal and general result on the top of the list. We've also got IonQ analysis. This comes next. Massive event last night. Everyone's talking about this company right now. This is why I'm doing it for you. This is next. IonQ analysis. That comes next in just 31 minutes time. Right now on Discord, I'm going to do a Discord event, an on-stage event as well. Then we've got some analysis for you, but we've also got SoundHound earnings. That's related to NVIDIA, and which is coming up in a week or so's time, but that also leads in on, follows on from IonQ earnings. So all of this kind of knits together. It's a massive day today, really, really great. The bell's about to go. I'm going to send you all now over to the IonQ earnings, but what I'd like you to do, if you've missed anything today, is I'm going to give you the link to, what should I do? The IonQ is only half an hour away. I'll just give you that. It's I was going to send you to the extra channel, but there really isn't any point because we're all going to be in Discord in a few minutes anyway. Literally, Discord is 1 minute away. So here is live next. Okay, there's live next for everybody. That is the IonQ analysis. Right, big day today. There's McDonald's. We're next looking at SoundHound tonight. There is SoundHound up today. No surprise. There's a lot going to go on there though today. Right. I'll see you on Discord in a couple of minutes. Then we got SoundHound. We got Legal and General. We got Resolve. We got SoundHound earnings. I've got the IonQ analysis. Like, when do I sleep? I don't know. Anyway, I'll see you back in a minute. See you over now on IonQ, or if you are going into the extra channel. That's it from me. The bell's about to go. Shall we ring it? 3, 2, 1. The market's moving. Here we go. We're down $1,500. That's
I can't believe
I
this.
can believe it. We got a new member. Thank you very much indeed. All right, Coca-Cola now on sale. After the warning, we got the warning from McDonald's. We got the warning. Recession's coming. Everything's going to trim down, but we want to be in there. Right, this is your sell-off to buy back. Has it gone low enough? No, it hasn't gone low enough. It's got to go another 1.5% before I load up anymore. That's when I start using the T-bills. That's when I start using the margin. But right now, no, not viable yet. Okay, I'll keep my eye on that. Very interesting. We know what's coming. We know what's coming. If you don't know by now, then you've been sleeping under a rock. That's it from me. See you on Discord right now. See everybody else over there on IonQ earnings in 29 minutes. SoundHound as well tonight. Loads going on. See you back in a minute. Take care of yourselves and each other. Thank you.